pit.
Hello everybody, welcome back. Hope you're doing well. Let's have a look at Bitcoin and transfer some of this information onto what we think is going to happen with altcoins in the very, very short term and medium term, I suppose. And I suppose on the long term. So yesterday, as we were making the video, the event had already taken place, the Ukrainian invasion, basically, and we came down to this area. So this purple box here is support resistance, basically, but it's also a CME gap. This 35,000 is where we front. Well, I say we, the royal we. This was the last place that I bought Bitcoin after selling it around these zones here, yeah. It was more filled on this test than it was on here. The buyers stepped in dramatically over here, and if you look back in time, just over to the summer dump, we had a lot of candle bodies holding above this level as well. Remember, this is a CME gap area rather than a major horizontal like the one just below it, which is where the double bottom formed on basically Bitcoin. But you can see double bottoms across the market because the market was following Bitcoin. This is the problem, I suppose, for trading altcoins, that when Bitcoin is generally directing the movements of the entire market, there's going to be some coins that break away from that for various reasons, but generally the market's going to follow. And so we see all these when we're looking on the live stream. We see, oh, there's a double bottom. But if we recognize that why the double bottom formed on the altcoins, it's because the double bottom formed on Bitcoin. But yeah, a major level of support, it's at 29,000. But so far the buyers did step in here. But as we were talking just now about how the double bottom formed on Bitcoin, which made all these other altcoins double bottom or appear to double bottom, we can have a quick look at traditional markets. So we've got the Nasdaq here finding itself a massive bounce after that huge wick. So huge big buyback taking place. Correlation? Most likely. Even the FTSE, even the poor old FTSE is doing the same. Big buyback taking place so far. Obviously, still pretty much underwater from yesterday's candle. S&P doing the same. And the Dow Jones is doing the same, but to a lesser extent. So correlation across the board, it does appear that is the case. So now what we should really think about is, forgetting so much about the wicks, let's have a look at the candle bodies. This is the main thing that we should be focusing on, and we're back within this zone, the zone that we were in before and after the event took place. So 1, 2, 3, 4, 5 days in a row still within this range, right? The range being 36,800 and 38,600. That's small range, but with the way that the chart looks, basically facing down, no particular bullishness exists on this daily chart, I have to say. 4 hourly is obviously going to look a little bit better after that bounce, pushing us up above most moving averages, getting a rejection from the top of the Bollinger Band, not quite getting up to these levels, 40,000, which would have been great. That's the 200 exponential. A nice retest of that would have been good. However, that could have easily and probably would be interpreted, in my opinion, as a place to short from. As you know, when we get golden crosses, you get bullish retests of them before moving up. As we get death crosses, you could easily have a bearish retest of that before moving back down again. So we front run. It was front run. All of that was front run. So let's have a look at the way that this chart generally looks. Well, I can tell you now that there's bullish divergence to a large extent formed on the 4 hourly. Massive bullish divergence still, despite what happened yesterday. Still technically valid, I would say. So that looks okay. Maybe we do get a drive and a continuation up to the $40,000 to $41,000 area today, potentially. But when there's things going on in the world which are horrendous right now, absolutely devastating, and situation unfolding and all kinds of madness taking place, expect volatility that can't necessarily be foreseen on these charts. So that is, we've been saying that for a little while now. We've been saying it since we took some chips off the table before here. This was the virus, and we were thinking, oh, well, look, previous history suggests that there's going to be a sell-off in the market, and we got that. So again, we didn't really see this particularly on the chart, although we had a death cross and likely get continuation. We did take chips off the table because of outside forces. And so with that in mind, you know, there are massive events taking place right now that involve effectively the entire world, right? And massive economic sanctions. This could go either way for Bitcoin. It could drive it. It could be the making of it or the breaking of it. As we see that it's generally correlated with traditional markets rather than commodities like gold, for instance, then it might not bode well in the short term, as all of this sort of stuff is going to affect traditional markets probably negatively in the short term. You know, as you know, things get priced in, sanctions, repercussions of sanctions, effectively inflation going higher, you know, people carrying the burden, Fed probably going to have to tighten as spending increases. All kinds of madness is going to be transferred onto these red and these green candle bodies. But for the moment, on a chart basis, the 4 hourly does have bullish divergence, which is still, in my opinion, still playing out. But breaking out from this particular level, closing above this particular level, 38,600 would be great, and I'll be looking for a push up towards the $40,000 to $41,000 zone. 200 exponential on the 4 hourly, basically. But that said, I mean, we were talking about how we got to keep our eyes on the weekly for the short signal, which would dictate a large move down. We're not going to get that at the moment. We're not going to get it. We need the Chiku span to close below the cloud. Again, you know, all the threes, 3,333 is where it needs to close this week for that short signal to be generated. And obviously, we need the candle to close below the cloud as well. Outside of that, we've got the red portion, which is a tick. You know, that's part of the signal. We've got the cross, which is part of the signal. We need the latter two, so we need these four components to kick in to drive this further down. We don't have that, which is good. And the other thing for a major big downside move, and I'm sure you watch my videos, so we spoke about this a few days ago. If this were to happen, we need to see a closure below the monthly center of this Bollinger Band, or the 21 exponential. They're both basically at the same place, which is at that horizontal level as well, which is 36,005, more or less, you know, and that would most likely spark a bit more of a vicious move down on a monthly. So we're talking monthly here, outside of just its position on the Bollinger Band, which again, you know, if you're bullish, the odds are in your favor to buy back here anyway. If you're bearish, you would wait for that closure below there and expect, you know, greater, you know, bigger moves down, and that would coincide with the signal on the weekly, again, which neither of those precursors have been met yet. So that is your Bitcoin summary, basically. Probably a small continuation up, I would say, towards the $41,000 zone, potentially $41,000 zone. So we'll get rid of all this traditional markets. It was just there for reference that they're all doing the same thing as Bitcoin. It's all tied very much into the system Bitcoin. This is your Bitcoin dominance chart. So we're moving up, and this is what we expect to happen anyway. Over time, whether Bitcoin's breaking out or breaking down, this is likely to move up over time. And the major alt season, if any, it could be generated at this level, 47.4%, right? That could be the first opportunity to get some major gains, you know, serious, you know, hundreds of percent type gains from altcoins. At this very moment in time, though, if we turn the indicators on, we can see that we are pushing up to the 200 exponential, which has had rejections in the past, just quite recently, and over a longer period of time, there has been some significance to it. We've been downtrending so significantly so long that now, you know, we are able to think about supports and resistances based on moving averages, and we are at that right now. So it might offer some more upside for altcoins over this next 24-hour period. You know, really big ones. We can already see that some of these things are bouncing, but realistically, you know, are they in profit from where they were yesterday? Some are, actually, I have to say. Some are. I've got some residual Go chain left from a bot that I had I was using on my bot trading with Bitsgap, right? And I still have a bit of Go chain left, and I noticed that the trading volume on Go chain was up 5,000%. I don't know what's going on with that, but it's a big deal. So there are going to be outliers here, there, and wherever, and especially the small caps. If this breaks down from here, even, you know, we're just talking about a little bit here, you know, maybe just down to the 21, which is, you know, just less than a single percent. That 1% these days is quite a lot when you're talking about a giant market cap. You know, back in the olden days, the market cap of the entire of crypto was generally quite a lot less than half a trillion, really. At its peak, really, before we went parabolic around these levels, it was never half a trillion. It was mostly trading at less than half a trillion. So now obviously we're 3 times that, even at these current levels. So 1% down for a Bitcoin dominance chart could mean double digits for some of these small cap altcoins. But again, when we are expecting this to continue up and break out from here and make it march its way all the way up to 47.5% basically dominance, then it's a matter of not being greedy and just taking profits where possible. My strategy is always taking profit into Bitcoin regardless of the price of Bitcoin. Use alts to earn more Bitcoin. Bitcoin's my balance, and whatever Bitcoin's worth is kind of irrelevant generally. It's the Michael Saylor approach. Got to be in it for the long term, man, and it works for me anyway. It might not be your preferred strategy, but yeah, we could be looking and probably are looking for a bit of continuation for altcoins maybe over the next 24 hours, but a breakout from this level here, and again this could happen in a form of a Bitcoin breakdown or a Bitcoin breakout, then sats will continue to be left out of the majority of altcoins. But it is looking pretty good, I have to say. I do quite like it for a small short-term continuation move from some of these altcoins right now over a 24-hour period. Look, if we get rejected from here, which we probably will, and then break down from some of these major some of these major strategic moving averages, mostly the 21 exponential, which is currently at 42.6% dominant. And again, we're looking at a daily here. Breaking down from there, we could easily approach the bottom of this Bollinger Band, which is again, we're talking small moves, but this would be big for small cap altcoins. But I'm not looking for this to break down. The chart is bullish. We've got buy signals on it, as in like continuation signals on this chart itself. So I am looking for this to over time creep up to at least 47.5% dominance, which means that sats across the board will largely be drained out of Bitcoin. Out of altcoins back into Bitcoin before a potential decent rotation at this level. Breaking out from here, again, rotation level at 52, and again another one at 58. So, this chart looks to me very much like it's accumulating at this lower level, getting ready for a breakout, and that could happen in either a big breakout for Bitcoin or a breakdown. So you got to be on your toes really, and also you've got to be thinking, realistically about what your short-term strategy is, if you have one at all. Long-term strategy, I'm sure that sats will be regained over time once we get to these major levels. It doesn't take much for altcoins to really catch up with Bitcoin, but in the short term, as in immediate term, maybe some continuation with altcoins, significant ones, double-digit ones, and then inevitably we will break out from here and move up to here. This is where I would say a potential major alt season will take place, and all eyes will be on altcoin charts to a large extent around this particular level. And what we'll do is when we see the Bitcoin dominance chart move up to 47.5, we will look at altcoins. Where are they? Do they have buy signals? Have they accumulated for a long period of time? We'll look at them with their Bitcoin pairs and their Tether pairs. Are they at horizontal supports? What's going on with those particular coins? And then we'll choose them appropriately based upon where we are with the Bitcoin dominance chart. Now, it might not work, but we have had a bit of a fix on this chart. Here. So it would be an obvious place to try some decent altcoin positions, but again, I do think it probably will have the power inevitably to break out from here at some point. First retest of it will probably have a breakdown, and then probably I would imagine this time round, because we'll be above all major moving averages, we will then use the 200 exponential as a building point to continue this push up to higher levels on the Bitcoin dominance chart. This can be and has been in the past. When crypto wasn't so easy, when it was a matter of having to make the most out of rotations because that was the best way to play the market. It was a very useful way to make the most of every little aspect of crypto trading, and it's been less so recently because it's been so low. So I do welcome a big move up, especially because I do hold mostly the largest crypto position I have is a Bitcoin position. And I do welcome that because I want it to be even bigger, and the best way for it to happen would be for Bitcoin dominance to move up to particularly large levels. I would really like to see it move up to 58% dominance before a major rotation, because these are the rotations where you enter into altcoin positions with really good signals that can be left for weeks, maybe even months, to generate really large gains, hundreds of percent, well, maybe X's on occasion, but hundreds of percent. At the moment we are just looking at double digit potential for maybe a 24-hour period or so, and we'll see where we go from there. But The market is basically continuing with its sideways thing. Forget about the wicks, let's think about the bodies, and the bodies are basically all the same. So the situation really hasn't changed for Bitcoin, and then it's been for, well, this entire week really. Every candle basically being the same, regardless of the wicks. The candles are almost exactly the same. So looking for a push up to 41,000 or thereabouts today potentially, and a continuation for altcoins as well for a 24-hour period or so, and see where we go from there. Overall though, we have to recognise that the trend is still down. The bears have control over all time frames outside of the monthly. The monthly's hanging on for dear life, and so the best thing I would say is, if you want to try and make some trades today, then do it, but just be careful with what you're doing. Overall, I would still focus on what could take place in March into April, and basically just try to limit your risk and exposure. Keep your available capital available for what could be some really serious moves, whether from a much lower position or from a higher position, but a bit more of a safer position in March into April. Right, I'll leave it with you there, guys. Hope you have a nice day. Take it easy.